Building wealth is more than just structure and strategy. It's about access and ownership. The wealthiest people have access to deal flows that regular folk know nothing about. So, what are these deals? How do you get them? And where do you find them? Well, that's what we're here to learn. My name is Onisa Naholo, and today with my co-host Disappear, we're going to talk about private deals, where they are, and how to access them here on the Market Terms. With me today is Jude Dike. Jude is the CEO of GetEquity, a licensed digital asset issuance and exchange platform in Africa with a focus on RWA tokenization and trade. He's also a venture partner with WeFunder, the largest crowdfunding platform in the world, and RallyCap, a $30 million fund specializing in B2B infrastructure across evolving economies. He has been an operator in the tech space with about a decade's worth of experience working in the African, US, and Asian tech space. Today, to share your experience in the markets so that you know what's going on in the private markets and how to get in. Jude, thank you for being on the show.
Yeah, thank you for having me.
All right, let's set the scene, right? A lot of people are hustling this year. People really want to get rich, especially this year. I had so many calls about getting into the equities markets, right? A lot of people want to know about what's going on in the equities markets. Also, yes, there's private, the public equities market. We've talked quite a bit about that and equities on the show. But doing our research, we found out that there is a whole other market that a lot of Nigerians don't really know about. This is the market that you operate in. Should I call it the private equity markets?
I think in general, it's just the private capital markets in general.
Private capital. So, tell us, what is the private capital markets? And not just the definition of what it is. What is private capital market here in Nigeria?
Okay. So a lot of people know about, when you talk about stock markets, right? A lot of people know about the NGX, the one where I want to go and buy Danite shares, I want to go and buy UVA shares, etc., etc. But we have what is now referred to as the private capital markets. Now, that is pretty much comprised of equities, which means I want to own a piece of a company that is not yet public. So it can be anything from the Chicken Republics, it can be even Main Street, right? So it's companies that are doing well, but are not yet large enough to be listed on the public markets. They are actually ways that those companies raise money. And either they raise money from a few people or they raise money from a whole business saying, I want to raise money. Private capital markets is basically saying, but I want to raise money from people, right? Yeah. But the difference between the public markets and private markets is that the requirement for people in private markets is much higher, right? Public markets means that anybody, anywhere, can be able to access it. In fact, before you needed to just do it through a broker, right? But now with digital platforms, it means that anybody, anywhere can be able to access this. Now, the difference between that and private markets is that because this company is not public yet, the threshold for you to say you want to put money in this business is a bit higher because the companies are less sophisticated. They're not as big, their financials are not as much. And so you need to be able to understand the risks around that to be able to get into it. And that's why the threshold is much higher. So private capital markets, a bit similar. Yeah. Only requirements are a bit more. Requirements from you, the person who's looking to put money inside. And then because of that, a lot of companies just typically, the amount of money you would spend, the amount of time you spend, stress you spend to try to get maybe 1,000 people. It's just much easier if you could find 10 people who had the wealth equivalent to those 1,000 people to be able to invest in. And that's where the sort of difference comes about.
So it's exclusive, it's beyond the threshold, right? So what we say is the threshold in interest.
So they're different. The threshold now edges out for different types of instruments. So for private equities, it's usually, in fact, let me start with this. The SEC in Nigeria has what is referred to as a qualified investor. And a qualified investor starts not just from how much cash you have, but from your sophistication in terms of, do you have certain knowledge around finance and financial instruments? Do you understand savings? Do you understand how investment work on a basic level? If you do, then there's now, do you have enough disposable income? And disposable income is basically saying, after you've taken care of your needs, do you still have enough money that you are able to then put to other use, right? So after taking care of feeding, clothing, housing, is there other money that I can even afford to use, right? And that if I lose or if I end up losing, will not affect me drastically. That's how disposable income is being measured. And so you're required to have a certain level of disposable income. I think for that to be calculated, I think so what we tend to just do is an earning threshold of, the average Nigerian earns, I think about, probably biggest reports is every Nigerian earns less than 100K.
Yeah.
And that's why we put our threshold at 100K, because the truth is, private investing is not for the average Nigerian. It's typically not for the average person. And so from a disposable income level, it means you need to, even after you've taken care of your feeding, your needs, your wants, all of that, you need to be able to have over 100K or over 100,000 naira in disposable income to be able to invest in some of these instruments.
Okay. So,
and this is much different from public markets where I think, stocks are at like 2 naira. I can buy with 500 naira, I can buy shares in GTE, for example.
Right.
Maybe not just sense, but I can buy shares. You come.
So, get that, yes. A lot of Nigerians won't have 200 naira is the blue income. 100,000 naira. But there are people that do. So I think that for people that do, they can't have access to it.
Exactly. And so that's where the distinction, or that's where the question mark came from, in the sense that, yes, obviously, for the security and protection of people, there's been this requirements. But just like I said, there's companies, there's fund managers who would, it's much easier to just go meet 10 damages, right, to raise maybe 100 billion, than for you to now say, okay, I'm trying to raise 100 billion. Maybe, I think what's the word called? Survey says about 1% of Nigerians make over $1 million a month. So that means you're looking at about 2 million Nigerians, right? And so if you wanted to raise maybe 100 billion now, you're going to try to raise 100 billion for maybe 100,000 Nigerians. It's much easier for you to convince 10 people to raise 100 billion than for you to convince 100,000 people. And so if you as the fund manager or you as a company is looking at how, or what's the best way to go around this, is usually cheaper thing to do with those 10 people. And so that's where platforms that's where people like us then come in. That's the fact that, so to these 100,000 people, they meet all the right criteria, right? But now they don't even know that this company A, let's call it that, is company A who has good financials, who is looking for money to be able to scale up and has the ability to pay back. They don't know that company A is looking for, let's say, 100 billion, right? Because company A would rather just go to this 10 people. And this 100,000 people within themselves have the capacity to bring in, let's say, 60 billion. But company A also doesn't know that, because from what they looked at, it's that to even want to try that will cost them a whole lot than to go to this 10. So they would just focus on this deal. And now, the beauty about or the thing with this structure is that company A, because they're raising and typically, right, in this sort of instance, we'd say why wouldn't they just go to the banks? The banks, the interest rate from banks, especially like in this period, right, is quite high. And so you have bank interest rates which are swimming above like 31%, right? You have the regular, let me say, if I was going to invest in regular investments, were swimming at less than 20%. And so there is a particular threshold where company A can say, instead of me going to the bank to get a loan at 30%, I can go to this 10 people and say, I want to borrow money and I'll give you at 27, 28%. To company A, it's cheaper than the banks. It makes more sense. This 10 people are going to be able to. But then this 100K people who only know of, let's say, treasury bills, and the only thing that they have seen that they can use to grow wealth is like 16%. But then there is a full ecosystem around here. There's a full margin around here that can provide, I think the difference between 16 is about 12% more. And so that's where platforms like us come in now, because while we understand, you understand the entry pieces of company A. So we're saying, what if instead of you having to go to these 100,000 people, we already were an interface to this 100,000 people because we have them collated. And then if you as company A now is looking to raise 100 billion, you can then interact with us and we can get you this collated amount from this 100,000 people. That's how typically it will work. It works in like the private capital markets. And this works not just from, in the example I've used, which is debt and borrowing money, but from also investing in the company. Because the thing is, companies who, it's easier for you to go from, let's say, the difference between 1 to 100.
Yeah.
Right? In terms of multiples, it's times 100. It's very different from 100 to 1,000, which is just like 10. And so private companies are usually smaller. And so as they're growing, the growth rate is higher, right? The returns are higher than public companies that have gotten to a certain level. But even though they're growing, the rate at which they're growing is much slower.
Okay. So I think from what you said, it's for Nigerians that how do I embed all of this to look where we come.
Yes.
The goal is to get into this ecosystem that if have access.
Exactly.
To this private capital market.
Exactly.
All right.
So, you spoke really well about from the private capital market, and I think from also what you said, it is clear that globally, people have access to capital markets, the private capital market, more than we do in Nigeria, and that seems like we only get to know about things when it's mostly at the mature stage.
Exactly.
Like that private market, like you don't really have knowledge, which is where you come in. But I just want to know, like, investing generally, especially in startup, why does it feel so exclusive for us as Nigerians? And also, like, it's most time feels like it didn't happen, right? But it happens again closed down. Maybe about all these things they become public, and like you said, when they really rallied up and you made so much money, and you just get to come in at the later stage, which a lot of people have exited far behind and like they made so much. And now, so like, what determines access to these opportunities, and like, how can a regular person, like our viewers who don't really know about it, how can they get it? And
one of the biggest is risk, right? And so there's always the saying, the higher risk, higher reward, right? And so because risk is one of the biggest factors in almost everything finance, whether it's insurance, whether it's credit, whether it's investing, right? It's the fact that there's the possibility of losing your money, right? And so when you look at that instance, the returns that you get, or the possible returns, is usually based on the amount of risk attached to it. Let's say, for example, the least risky investment that you can ever put your money in as a Nigerian is treasury bills. And the reason for that is treasury bills is backed by the government. And so come rain, come shine, if you borrow money, if you lend money to the government, and which is what treasury bills are, treasury bills is basically that I as a person I'm lending money to the government of Nigeria to do things, whether it's to fix roads, whether it's to run, let's say, infrastructure, healthcare, whatsoever. If I'm lending money to the government, the worst case scenario that can happen is that if the government needs to pay me back and they don't have enough money, they go and create more money. So no matter what, the government will still pay you back. The only question mark there is how much that money will be worth after you do pay it back. But when you now start to climb across that risk ladder, when you're now looking at things like even this private market that I've talked about, while you can look at it as A company B are at a certain point where they can pay back, things happen, right? Anything can happen. There could be instances where, for whatever reason, we had some instances during COVID where companies that are tailored towards, whether it's airlines or hotels, they didn't have enough money again because people weren't coming into, everyone was stuck at home. Nobody was flying, nobody was staying, people weren't really staying at hotels. And so they're not making as much money as they typically would make. But then there are certain expenses that no matter what, you will still have to incur. And so in those particular instances, the company might not be able to pay back that money that they had borrowed. There's nobody anticipated for, example, COVID. And so the risk factor then becomes that there's a possible chance that this money might not come back. And so, in fact, even by law, the SEC, which is our regulators, are supposed to protect people and make sure that the only people who are investing in these sort of instruments are people that understand this possible risk. Because I can say, if you were to survey maybe 100 Nigerians, there are a lot of people that don't know about these things, right? So, in fact, you can look at people who invest in agriculture. For whatever reason, the harvest for that period might just not work, right? Which we have seen in many instances. There's also security issues and all of that. So the risk in this particular system as well. And so when you start to factor all of these things in, it is why you would see that the average person who maybe has let me even say the average Nigerian who earns maybe 500,000 naira to 1 million naira and has a disposable income of about 100,000 or more, typically understands risk across. If I put my money into something like this, it might not happen. Than the average person than the person who that 100K is exactly what they need to survive. Right? And so the government by law is required to protect these people who need their own money to survive from, for lack of better word, gambling with it from a risk reward perspective. Because yes, I see other people have made money off this thing, but me and that other person are not the same thing. That other person lost the money that he invested in this thing. They might think about it for a day or two and then, life goes on. But for me, it might be the money I was supposed to use to pay my rates. And so I'll end up sleeping outside. And that's why even from investing, there are certain cadres to it. And again, it's still the same risk reward thing. For a lot of companies or for a lot of success stories that we hear, there were also those that weren't success stories. And so even within private markets, from the things that you can invest in, the higher the risk, the higher the requirements that you need to meet for that. So there's till now certain private investments that maybe only the Dangotes or the Otelolas can make. For example, setting up Dangote refinery took a lot of money. It's not the kind of investment that, let me say, any Nigerian that is even earning 10 million naira a year would be able to make, because at the start that required a lot of grit, and there was possibilities that your time is gone. So I think yeah.
Okay, so I think I hear you, what you said is pretty interesting. But okay, I want to come from another angle. which is the young people. You have friends also that maybe they don't do software engineering, they're not engineers, or they do something else really, and they're making a lot of money, and they don't really know about this market. They have the knowledge to invest, but they don't really know about this market, right? But they would want to get involved with this in this market, and they're interested, or they just want to learn more about because they have disposable income. So how do you think that would go for them, or how can you think about that?
So I would say that's exactly what let me say, first off, platforms like ours exist, because even in the very first instance, right now, by law, to meet some of these investments, in fact, for what some fund managers or what some companies, for you to meet some of these investments, because again, it's usually harder to meet maybe 50 people that we just talked about, young, have the disposable income. It's much easier to just go to 5 much older people who already understand it, and they already have maybe the typical, if to say they wanted to just get maybe 100 million, they can just go meet 10 people for 10 million each. But we who are much longer might not have 10 million, might have just 2 million each, but there's 200 of us, and if you multiply 200 by 2 million, that's 400 million, right? Which is more than this 100 million that we got in from here. But because there's also even let me call it a disparity. A lot of our fund managers are run by people who are much older. The networks are people who are much older as well. And so what we're trying to now be is that bridge. And I think also a podcast like this as well, because people who are more likely to listen to this are people within the younger generation in itself, people who want to be able to understand it. Now, we might have some older people who have been doing this for me past 20 years. It started 20 years ago. They understand certain things around question X, Y, Z. What we're now saying is, how can we, the pie, how can we increase the pie, right? And the best way to increase this pie or to increase this market is not to say, oh, instead of here, take from here. Is to bring everything together. And that's where platforms like ours now come in the sense that to be able to get these 200 people that have this 2 million together, they might not know who's going to do the let's say awareness, how the structure of how these people will bring it together to, let's say, company A or fund manager A. That's what people like this can call it.
For an average person, this is an opportunity to start up at a stage early. But there's this thing of first mover advantage. I think you are the first in the market. I don't think I've ever been in other platform in our market. I think about the other market. So how has it been for you navigating? Because sorry, I want to use the very simple scenario. There's this thing where when Jumia first started, they were not so good. But they were good, but when the human is broken, but how they came, they figured out all their mistakes. They were able to work around it, and now Chowdet is the leading food platform. So for GetEquity, how are you able to navigate all of this and still keep up with it?
I'm tempted to say by grace of God, was. So the thing with first mover advantage is that you're the one that makes mistakes for that other people can learn from, right? In terms of the first movers that we've seen that are still winning, let's say if you look at Uber, if you look at Jumia, in fact, the best way for it, or the best, let me say, the examples that I've seen, is that you're able to make your mistakes and recover fast from your mistakes. The ability to learn fast, the ability to learn and learn fast from your mistakes is what still keeps them in that driving seat. Because you will make mistakes, right? You are creating a roadmap that doesn't exist. It's kind of like you're building a road that did not exist before. If you are building a road through the forest, yes, you might plan and plan. But when you start building that road, when you start cutting through that forest, you might see things that you didn't anticipate, right? And now other people who now want to be able to maybe build a train along that road, you've already shown them the path. You've already shown them the possible things that they should expect from that path. So they will build things they would spend less money, right? And they would spend less time to be able to get to where you are. So the one major thing is from your innovation, it's like your ability to have an idea, execute that idea, learn from that idea, and keep pushing forward. A lot of the examples that we've seen are those who weren't able to easily, a lot of the examples that we've seen that have dropped off was either they didn't have the time to be able to learn from whatever mistake and execute forward, or they didn't have money, right? And so for us, is to always be at that point where we can keep learning and keep executing.
All right, let's get practical. All right, we'll talk about investing, target markets, capital. Let's get it. Ground floor. I have not invest in the target markets. Now, of course, there are platforms like yours that's very big together, and I'm sure you guys have the pipelines and you guys have your own, any kind of analyst or in-house analyst that analyze things. But let's say I was a person who wanted to try to do it myself, right? Earlier in the conversation, you said you always hear about winners, right? We hear about the Dreamers and the Uber, but we don't care about the users. That's technically how life, right? So now, what makes a winner a winner? Because I can assume you guys got data, so you see the deal flows. You see companies that do well, you see companies that don't. So have you seen any pattern or any commonalities among people, among companies that end up doing well, and among those that don't end up doing well?
To be honest, right, I think one major pattern, and if you speak to extremely experienced investors, they will tell you that they usually, especially from the beginning, from the onset, they usually don't invest in the idea or in business. What they invest in is the person, who the founder of that business. And a major reason being when the chips are down, right? Whether it's like when regulators, when whatever, it's not all like the idea that saves the business. It's the person who's behind the idea. It's the ability to create, the ability to come up with new ways to innovate. Like what I just said, for example, in being a market leader, your ability to innovate, your ability to learn from your mistakes, it starts from the person who's on the driving seat, right? And so while I typically do not advise people to just go into it, and especially if you do not have that financial experience, financial expertise, and all of that, because it always leads to chaos. And major reason being, you are, I don't want to use the word competing, but you are participating in a place or in the market people who have much more knowledge than you, much more data than you. And it's almost like you're trying to get into a football match blind, right? And you want to score goals, right? You're competing against other people.
All right. Now let's look at the bigger picture. All right. I feel like we might be on the cusp of a new era of investments or investing in anything. And I said earlier, I do hammer that. I first thought the platform was just largely for just regular crowdfunding and private equity, that sort of thing. But then I saw RWB, right? And when you say RWB, you can't really talk about RWB without me talking about the purse. And especially for the level of formal or conventional finance podcasts, they tend to avoid talking entirely.
Yeah.
About I like how topics brings us to that specific. And but yeah, do you think that we are going to use a new era on investing? Yeah, the new era in the sense of now having a lot more access, because if I talk about RWB, even right now in the RWB market, you're looking at on-chain equities, right? So you have things like on-chain crypto happily, But let's talk about like regular, spot markets.
Yeah, definitely. So I think starting from 2020, we entered what's called the decade of the Great Wealth Transfer. And what that means is people who have, a lot of people who have made wealth, right, are now in their 70s, their 80s, in fact, from their late 60s to like their 80s, right? And this is typically when you have when our, should I say, mortality rate kicks in, right? This is typically when we're at the end of a lifetime. And now those people are transferring wealth to their kids, ideally, who are anywhere from their late 30s or early 40s to maybe early 20s, right? And now that generation, which is typically us, are more tech savvy. We're people who make use of apps more, or people who want to have this direct access, right? The previous generation were people who are more relationship based, right? If they wanted to do anything, they want to place a call through with their bank manager, with their stockbroker. Now, you want to make any investment, you just want to open up the app and do that. You don't want to call any stockbroker. And so we're seeing this across the entire world. It's happening in Nigeria, but it's happening across the entire world as well. So what does that mean? It means that the average millennial or the average non-millennial to, let's say, Gen Zs are looking for how to now generate their own wealth. I mean, we have disposable income too, whether from what we've made, from like working, or what we've inherited. And then it's like, how do I then grow this wealth as well? But not necessarily looking to do it the way our parents did, with having to go talk to your relationship manager and blah, blah, blah. So many people then tend to do their own research themselves, etc. One of the things that the blockchain, one of the biggest advantages of the blockchain, is that it is not defined by geography. It means that everyone or anyone anywhere in the world can access things that are already on the blockchain. Now, this is different from, let's say, the typical apps, in the sense that, apps, you can say, oh, for you to do X, Y, Z, you need to have like maybe a registration in Nigeria, blah, blah, blah. Or for you to invest in US stocks at first, you need to be a US citizen. Now, by creating all of these derivatives, it's saying that while this person, or while these stocks are still in the US, what many countries are now allowing for is that you can create what is referred to as synthetics of these investments. And now these synthetics will be managed by a local entity, but anyone can be able to invest in these synthetics, which is now where the blockchain comes in. It's saying that, yes, we have even the NGX, which did a madness last year. How do we drive FDI in? Any damages refineries coming up maybe later this year, who knows? There are a lot of people who around the entire world have heard of damages refinery and even want to invest in it. And then you're not just talking about even people you're talking about even diasporans, even Nigerians who are in the US. You're talking about people from Finland. They're talking about people who have never even been to Nigeria or stepped foot in Nigeria. And so I'm using them to refinery as an example because there's quite a lot of it. But now, let's say Dangote is trying to raise, let's assume, $10 billion, sorry. I want to raise money from people, right? But the thing the difference between the public markets and the private markets is that the requirement for people in private markets is much higher, right? Public markets means that anybody, anywhere, can be able to access. And in fact, before, you needed to just do it through a broker, right? But now with digital platforms, it means that anybody, anywhere can be able to access this. Now, the difference between that and private markets is that because this company is not public yet, the threshold for you to say you want to put money in this business is a bit higher because The companies are less sophisticated. They're not as big, their financials are not as much. And so you need to be able to understand the risks around that to be able to get into it or choose a synthetic asset. So now it's not saying I'm going to create a representative of these Dangote refinery shares that will be equivalent to what this local entity is going to buy locally, and then put that and see how many people who would want to invest in that. That's what we think is the future. The average person, let's say in Finland, who has, I don't know, maybe $100,000, right? And is looking to deploy that or is looking to invest that, might have looked at it, prior to this, would not even be able to, they won't even be able to invest or think about it because they would need to fly to Nigeria first, ask people around, how's Dante refinery doing? What do you think about it? Blah, blah, blah. But the same way the internet opened things up where they can basically go on Twitter and have a chat with people on how Dante refinery is, whatever, maybe even Nairaland. But now that they want to do that investing, ideally they would have needed to fly down here, do some KYC, blah, 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 before they do that. But now you're taking these investments to reach them from wherever they are. It's mind blowing.
Okay, so that's except that is
Exactly.
what was also as possible, right? For example, what was an home piece? To have so we expect to have that. It's just about just a technical algorithm. Right, because use right that the first said that now this is something that we do we invest in Nigerians as well, which is good. Because what we are aware of, sister, that's something driving, sister, that's what the pain of that.
Exactly.
I've never seen it.
Exactly. And so like R2B as a technology is already existing in the world, and I think as of right now, we have about $32 billion of invested assets.
Sorry, quand il continue. Et là, il y a trop de l'eau. The car the gauge shut that's some kids will leave and just
Okay, so-
say the food and I let him have him to contact and you know.
No problem. So the entire environment is digital assets that are tokenization. So the concept is that I am creating tokens. I'm creating what our digital tokens, which are related to all the assets that you have in the real world, right? So an example is I can say this building, right? In fact, I can say I want to build a 12-story building in Victoria, right? And because I need for any developer, what do you need finances, right? And so in this instance, developer is saying, I'm going to need 10 billion to build this. I'm building a 10-story building, let's say that. I'm going to need 10 billion hours to do this. It means that every floor is worth 1 billion, right? On average, let's do that. Now, what this person can then do is say, because I need 1 billion, because I need 10 billion, right? Normally, I would have gone to meet maybe 10 down the place, say, give me 1 billion, you own one floor, right? But in this instance, because anybody, anywhere in the world can be able to access this, I can say, I'm going to create tokens, let's say 1 million tokens worth of this, what's the word called? 1 million tokens worth of this building, where one token is worth 1,000 naira or 1,000 naira equivalent. So you can do it in naira now with the rise of what is referred to as stable coins, or you could do it in US. And because it's completely on the blockchain, it means that anybody who has stable coins, which is USDC, can buy directly. And what is the reason why they're investing? They're investing because they want to get returns. And when this developer is building the skyscraper, what are they going to do? They're going to sell it. If they started now building acts, let's say 10 million, assuming he's going to sell each floor for in 1.5 billion. And so let's assume he takes 10%, right? You're going to be left with about 1.4, which means that whoever is investing in this is getting 40%. Good. So the math typically arranged, right? Now it's saying, instead of me actually going to need these 10 people to do them that same math, I want to put this out there that I want to be anyone from anywhere in the world to be able to invest in this. That's now where RWA comes like in sense that I've created 1 million tokens. Each token is 1,000 naira. What does that mean? It means that by the time people have bought it up, for every single token that everybody has bought, they will get 400 naira. As at the end of this period, if they're able to hold towards that. And holding towards that means that, I mean, maybe it takes an average of 2 years for you to build and then sell. So it means that you're getting 40% in 2 years. And within that time, here's another beauty of tokenization, is that because you have tokens, and these tokens are entire pieces, it means that if maybe one person bought 10 tokens, which is 10,000 naira, and they say, I don't want to wait till the end. And let's say I waited, since this thing is supposed to give me 40% in 2 years, I've waited for 6 months. I can maybe decide that I want to sell my own for 10% extra. And that means that the person who is now going to wait 18 months would now get 30% instead of 40%, right? And there's someone who says, okay, I wanted to buy this thing, but it was already finished. I now want to buy from you. It makes sense. You've now created what is called a secondary market based off this. And that is now if you look at this from a larger concept, that is what the entire real world asset industry is. And how this works or helps us is, on the one hand, you have Nigerians who want to be able to get access to investments in maybe Dubai, get access to investments in Thailand, in Bali. Or you have people from those parts of the world that want really to get access to investments here. Normally, as a Nigerian, you would have needed to fly to Dubai to get registered so that you would be able to. But now, because what would happen is that there's a local representative who is usually licensed to be what is called a custodian. Custodian basically means that they're holding these securities on behalf of someone, and they've licensed and regulated by Securities and Exchange Commission. And so what that custodian is then working with partners like ours to say, okay, we're now creating these tokens, and anybody from anywhere around the world can access them.
So it's small, but in the world, and it's key. You allow it.
Yeah. I mean, the world has been a global village for information. Now we're saying we need to make the world global accessible as a global village for finance.
So part of the lower journey.
Yeah. Yeah. I think this decade is going to be a lot. I mean, it's already proven to be a very interesting decade so far. And things we've seen from AI, from the blockchain, I think there's still quite a bit on.
So on our first question, next part, deepest. Where do you see
ideas, see resources or ideas there in
Okay. So if you watch all these, those are the things that to drive my ideas for my head cards. If you watch anyways, you see where you see someone lost space on some money and just start by suddenly swag. The entire concept of an entire idea around that is driven by blockchain. And then you took Tom personas, right? And those tokens are enforced by laws to spend it or getting it there. Looking at that kind of scenario, I see in the next 10, 15 years, now with the use of AI and autonomous systems in general, I can have one AI doing things for me, planning my finances. I can have maybe even an AI that its job is to be my stylist, fashion stylist. You want to be able to style me, make purchases on my behalf, I can even, everything's moving digital, right? I can even have a personal assistant whose job is to draft my emails, all of that, but also make certain purchases on behalf of with my content, right? All of these different things are, we're seeing the very beginning of these things. For example, we're now seeing A2A, which is sort of like agent-to-agent payments, which means that you can have autonomous systems be part of our financial infrastructure, where I want to be able to do something. Let's say, what's the word called? Let's say I was shopping, right? I had an AI just browsing things for me. But then I can tell it if it meets XYZ criteria. So for example, I can say I won't shop for a car, right? I won't shop for a car anywhere but this is also where sort of tokenization comes in, right? That car could then be tokenized. Let's call it an ERC 7. I've forgotten what the ERC is. Or it's a fungible token this time with what is called NFTs, non-fungible token. The entire concept around NFTs is that this token, you cannot break it down into fractions. And so what does that mean? It means that you can represent anything that you don't want to break into fractions digitally. So a car, if you're selling a car, you're selling the car as one car, right? And so you can create an NFT of a car. I can then tell my AI, I'm looking for a car that meets this spec. And if it is within this price, buy it for me. And I can go to bed. So I'm envisioning a world where things like that happen from a much grander scale. I want to build something. I'm a software engineer. I want to build things. Those things might need me to subscribe to certain, maybe to pay for certain APIs or whatsoever. I'm telling my agent, this is the criteria, what's this that I'm building, run through it. I mean, you have AI now that helps with, software engineering. And what he needs to pay for that, all it just does is it has access to my crypto, the payment for whatever it's paying for. It's in crypto, stable coins, right? Which is sort of like a representative of the Naira, a representative of dollar. All it just does is it makes that payment on my behalf and still fastest, but something is working.
On your
Exactly.
very few.
Exactly. In fact, yes, Black Mirror. I am the same certain episodes of Black Mirror, maybe without the goriness. I envisage some of those futuristic systems in the next 50 years.
That's like the one about to get really interesting. But I know I can worry that just the way AI is being stored into these kids, right? What if you are hacked one time and then somebody else had access to your crypto information or all of your bank those on the house, however it's called? Is that clear the day or night?
Yeah.
Is that
Yes.
what you use when you're parked?
So the thing with every sort of technology is there's always pros and cons, right? Hacking wasn't the king until the internet was invented, right? And so usually how I guess we gauge technology is to look at the pros and cons. And if the pros outweigh the cons, then it's good technology. And then what you try to do is find ways to mitigate the cons. And so it's why we now have things like internet security, OWASP, and all of that. That didn't exist before the internet. The internet was what brought that out. And so it's how we now have we're starting to have certain things around AI security as well. I believe that with every new technology is a tool, it's like how you use it. But with every new technology, and this is where you have bodies whose job is to try to standardize those tools and provide mitigations against misuse of those tools. We have EU, you have in the US, you have certain bodies who they are able to create certain standards around it. I mean, there was a time where you have NDPR, we have GDPR. NDPR laws are laws around data protection. And so even when you're building something AI related, you still have to follow. I think there's now new NDPR guidelines on the use of AI. And so all of these things help in shaping what I'll call the black rule of tomorrow.
feel like before we run the gamut now for private markets, to cryptocurrencies, to technology, and the future. So let's bring it all back, right, to private markets, right? Essentially, there is a private market here in Nigeria that people with disposable income as well as, or as high as, depending on where it comes from, 100,000 naira a month can access. And essentially, for what I did, that market is growing and it's becoming more and more accessible. And yes, right now, of course, we're at the forefront of that right now. But I mean, I'm sure you might have a vision that as time goes on, you might have one or two other competitors come.
Oh yeah, definitely.
All right. But the market is growing and it's not as exclusive. Now, of course, there are deals that may be exclusive,
Yeah.
but the entire thing, it's not as exclusive as people might think.
Exactly.
Because they can just call up they can sign up for a platform, I believe, 6 times and access the markets. And I think that's really important, considering that in the age of digitalization, you need to be at the forefront. So thank you so much, Mr. G, for coming to the marketplace.
Like,
And there you have it. There is a market in Nigeria here for private deals and private companies, and can access it with as little as in 100,000 naira a month in the disposable income. Of course, there are considerations, and you shouldn't use a lot. You should go for platforms, like GetEquity that's for or even venture capital or asset managers that have good knowledge, about finances and financial markets. As always, won't scare from you. Tell us what you think about it. What do you think about private markets? What do you think about blockchain technology? We always love hearing from you. And as always, follow us on our socials and reach out to us on there. As always, stay safe.